Hi, welcome to the Market Alert for Friday the 9th of February 2018. So yesterday we started off moving to the downside, which was fine, and then just before midday, well, an hour or two just before midday, each bar is 15 minutes, and then the announcement that the UK are likely to, as it says here, Bank of England warns of earlier and larger rate hikes for the UK. Which is interesting. So once again, Carney has got it wrong, because when they increased rates in November, he said there wouldn't be any indication or reason why to increase rates until a year down the line. So once again, he's proved his incompetence, and it just seems to be a guessing game for him. And this so-called forward guidance crap that they keep coming up with never ceases to amaze me. We did have a long later on, and then of course the market comes back to exactly where it started, and that's because one economic news item isn't going to change the trend. The news is great for the market makers. It allows them to move the market in the opposite direction when it's predominantly being short, but eventually it comes back to where it's actually being traded. You can see there the market back to the sideways range, and this is more evident in the daily chart there. You can see that had we have had no news yesterday, we wouldn't have even have got up to the highs yesterday. But the market showing support, that's for sure. There could be dollar weakness coming back into the markets after the recent pullback and dead cat bounce for the US dollar. So I wouldn't be surprised to see if this market's finding support at this level as well. Price is back above the 20-bar average on the overnight there as well. Meanwhile, in the Dow, well, the volatility is just insane at the moment. These bars are over 100 points in range. You can see between the major and minor psychological levels there. And in order to get any sort of signals on the chart at the moment, running at 44 in both, just to try and get some trades there. But very dangerous, a lot of risk as well on the market, just reversing, and yesterday down 1,000 points, as you see here in the daily chart as well. So what's going on? Are we going to go back up or not? Well, there's a couple of things we can do here. The first thing is to now measure from the low to the high. The market back at 62 yesterday, 23,940. As night follows day, if we break the 76, we're going to retest the low, which we've seen in Bitcoin recently. This is how it works. So the market's got to do something today about moving back to the upside, because a breakthrough here and through here is going to see a retest of these lows. There is concerns. The bond yields continue to rise as well. If you have a look at those here, you will see that these shot up again yesterday. Big spike there. We're sitting at 2.82 on the 10-year. So again, there's a bit of a concern around this also. Now, to move higher as well, we've got from this high down to this low, so we can sort of bracket this market and see where the resistance is. It's also interesting to see, and just drag this one through there, that the 76 is also the high that we drew in on Wednesday after the fall during Tuesday. So we've got well, Monday, sorry, and then Tuesday back, the high of that bar, which still hasn't been seen the market close. It's been breached, but not the market close above. So there's a consolidation phase by the looks of things coming there. They certainly don't want this market down just yet, that's for certain. And the implied volatility is still pointing in this direction, even though yesterday we saw this increase to 25.92, and from the low of 11 we can see that we've more than 100% doubling in the implied volatility. And as we go further out into the 6 month, you can see this here. We've had this sideways move, and there in the yearly chart you can see the big spike there. So still the 100% and the market finding support. We've been here before, but this volatility, or the range of the bars, is massive. 1,000 points in the Dow per day is unheard of. It's a bit like calling it Dow coin at the moment, at about the Dow and Bitcoin, and it's Dow coin. This is the way this is actually moving up and down at the moment. Right, let's have a quick look at news, something I've just realised we haven't done. See what's coming out today. Not an awful lot. We've just got manufacturing production, good trades balance, and Cunliffe is speaking at 4:45. No doubt going to reiterate what Carney said yesterday. So we'll just wait and see how that transpires. But keep an eye on the market, in particular the Dow, because let me just get rid of the news here. And this, and you'll see the market's fairly steady. The new pattern at the moment is the market's being marked up in the pre-market session. There you go. If you look at yesterday, you'll see that the market made good progress in the pre-market session there. I mean, this is a massive move in the pre-market. There you can see 300 points in the pre-session before the market then turns south. So again, watch this in the pre-market session. It's likely to be brought back, and then watch out for weakness in the first half an hour of the trading session. Right, that will do for this one and for this week. If there's anything to report, I will let you know, but expect more volatility, but of a lesser degree I would have thought today. Although it is Friday, who knows, anything can happen these days, as we've seen. But will the central bank start to lose control of this? They certainly will at some point. That I have no doubts about, but I don't think it's just yet, unless we get a breach of those lows and the 76% retracement that we've looked at here. Right, that's it. Have a great weekend. As ever, thanks for watching. See you in the next one.